This one rule when trading red folded news days has converted countless losses into wins, and today we're going to break down exactly what that rule is using this A plus entry trade from yesterday. Now for the time, we're always going to be on the 1 minute time frame. The directional bias will be always on the 4 hour. Okay, so the pair is NQ. On the right hand side, we have ES. We are actively looking for SMT, which is an inverse of the correlation of both these assets. So let's break down the bias. Why were we bearish yesterday? Now, before we break down the bias, the time of day when we place positions is super important. I trade 4 specific macros. A macro is the first 15 minutes and last 15 minutes of every single hour. I just approach 4 that are high probable for how I approach my model. So starting off, which macro will we trade in? Well, this macro was the pre-market open macro, which is from 8:45 till 9:15. Now, this is the first pre-market open macro and the only pre-market macro you should trade. And it's only validated if there's red folder news at 8:30. Okay, so this was the red folder candle. Now, the other 2, or the other 3 macros, should I say, one is after the New York Stock Exchange open at 9:45 till 10:15. That's the first AM macro. The second is 10:45 till 11:15. And the third is from 13:45 and 14:15. Of course, this is called the PM session macro. It's only valid if you took no positions in the AM, or the AM is consolidating. So let's go back. Why were we looking for sells? Let's go to the 4-hour. Now, on the 4-hour, the first step to gauge if you're bullish or bearish is to mark out the previous 4-hour candle's high and the previous 4-hour candle's low. Very simply put, if we sweep the high, meaning price is pushed past it, we're going to actively look for selling positions. If we sweep the low, we're going to actively look for buying positions. Well, what do we see in this case? The market has swept the high. Now, we can see actually that price did keep continuing higher, but the bias and how we approach it is at least small enough for us to catch a nice little sell back down. We don't need to be correct throughout the whole candle, but we do need to be correct on how we mark out our key levels. Now, before we just jump in to take a sell, we need to mark out the closest bearish and bullish PD rays, which are inversions, in my opinion, and fair value gaps. To start off, we've swept the high, so we need to know where's the closest bullish PD ray. Okay, we don't want to be selling into a bullish fair value gap or a bullish inversion. There's going to be too much buying pressure on the 1 minute time frame. So the closest bullish is here. We see we've got 3 candles and it has, well, the third wick low and the first wick high don't touch each other, leaving that area of inefficiency. Obviously, most of it has been filled, but because we trade on the 1 minute, we need to know where it begins still. Okay, there's still going to be buying pressure that you need to know where exactly that's going to be. Now, in terms of bearishness, we have an inversion here. At the time, price had not closed above it, but we did have an old bullish gap that turns to a new bearish inversion. So we need to know that at the same time to help gauge our bias. Okay, we want the best trades to sweep a high inside a fair value gap or inversion. So now we are definitely bearish. Let's go back to the 1 minute. Let me get the text. Put it back here. Now, on the 1 minute, before we just jump in, we are actually trying to grade this A+, and I want you guys to fully understand what made this A+ in terms of the directional bias. Now, in terms of the directional bias being A+, there's going to be a few requirements. We're going to need to be above the 8:30 opening price. Let's mark that. And let's label it 8:30. And also the midnight opening price is both these are super important when I grade my bias. Now, we don't need to be always above both, but at least above one of them. So let's find midnight. Okay. So you mark the open of the candle. We do also want to see midnight be used as support and resistance throughout the day. We see it gets rejected multiple times. These key levels are still fascinating to me today. So Both these levels are being rejected. This is good. It means we're performing correctly. We are above midnight, above 8:30. We swept a high inside a gap. This is now A+ territory to look for a short position inside a macro. Now, if we were beneath all these and we swept a low, that would be meaning we are in a discount. If we're above them all, we are in a premium, so it's expensive. Okay, we want to sell back down. Now, in terms of the entry, now this is super important. I use a multitude of entry styles. I do trades on news days. Actually, let me add that in there. On news days, I do refine my entries down to these few. So we take the first one we see. We are either going to trade an FEG with a mitigation block. We see here we have the mitigation. We have the mitigation block, or an FEG with a breaker block. And now breakers and mitigations are very similar. The only difference is if it's a breaker, we're going to sweep the high and then come back down. In this instance, we haven't swept the high, which is fine. These are still pretty good. Breakers I actually do prefer, but mitigations are still valid if we have that fair value gap overlapping. Now, we do also trade inversions if we have a volume imbalance. If you don't know what a volume imbalance is, I did break down this perfectly in a 1 to 5R breakdown. I will leave that in the description below if you guys are interested. It was a fantastic position. We never see anyone taking inversions, only with volume imbalances. So check that out. Now, in this scenario, let's actually replay to the macro time. First, before we find these, they're always going to be a requirement of a displacement. Now, a displacement is just a break between or a break past a short-term low. Obviously, we know that the market moves in higher highs and higher lows. When we're bullish, we want to see some bearish pressure making a new lower low. Okay, that indicates seller strength for our entry later on. Okay, that's an important requirement. We're not just going to take any fair value gap with a mitigation, but to be fair, a lot of the times for these to be coupled up, there is always going to be the displacement anyway. I do want to mention that. So we've had the displacement. I was now actively waiting for price to leave a fair value gap. And we left 2 here. And this is why I was saying one rule that I've actually implemented when trading red folder news is not taking the first gap. If this was not on a red folder news day, I would take this as a breakaway, stop loss above the breakaway, the actual fair value gap, or at least above here. But this will get you stopped out more often than not on these red folder news days. So this day, you can wait for price to come back to the fair value gap that overlaps structure. Now, that's not the end of this rule. Your actual entry is not even off the fair value gap. Okay, normally we take the first point of entry, which is either the mitigation or the fair value gap. But on red folder news days, this is so important, guys. I promise you. You can go and backtest this on the last 100 times we've had red folder news, as it's too volatile. So you want to place your entry directly off the mitigation, which is actually this bearish candle here. So we want to place the entry off the mitigation, and then you wait for price to come back, hit your sell limit. As you see here, I'm just going to pop the screen up of the video. We see I got tagged in perfectly. Fantastic entry, which allowed me to secure a small position, and I wasn't even correct on the overall move. Okay, we see that price did come actually back to my break even. We started going towards my take profit, and then we did in reverse. Okay, so that's one of the important rules I do want to break down. But let's go over the stop loss placement. I kind of missed that. And also we had SMT. So I've missed out a few points here, but you can see them all on the screen. Another way to gauge if we are extremely bearish would be to find SMT. Now, SMT is an inverse in the correlation, i.e. if ES makes a higher high and NQ makes a lower low, this is bearish SMT, but the weak version. The version that we like to actually approach is when we have ES making a lower high and NQ making a higher high. That's the best SMT that I would focus on. Now, in terms of targets here and stop loss placement, the targets are always going to be a 1 to 2. So if we replay to the actual entry, you can see in the video, I originally was targeting this low. but we go for a 1 to 2 and then the closest draw on liquidity. That can be a swing low, equal low, AMD start. So if we look here, we had accumulation. A lot of times prices are going to want to come back to the accumulation to rebalance before we then push higher. So we had multitude of entry requirements or targets, should I say, swing lows, demand with a gap. Now, this is the one that I chose today, a demand with a gap here. This is our demand. We see we have a gap just above the demand, making this a valid target. So we went for a 1 to 2. That would have been inside the gap, and we can see it never hit anyway. But stop loss placement, you have 10, 20, and 5 points. 10 points is what I decided to choose yesterday. You just need to align whichever is above the swing high. So in this instance, 10 was close enough to the swing high, 20 would have been too much, and 5 would have been too aggressive. We're nowhere near the high. So do that with your own discretion, but that is it. Kind of messed up that last little bit, so any questions, you can just let me know down below. I really appreciate all the support you guys have been giving me. I love to see it. So thank you guys for watching. I'll be back with another trade recap. And go follow the Telegram. We post these videos for free in the Telegram for you to download and study. So thank you guys. I'll be back